Well, happy Monday once again, everyone. Bryan Devore, Devore Realty Group, Berkshire Hathaway Home Services, California Properties. If you celebrated Father's Day yesterday, I hope you had a great one. Today, in the Monday Market Moment, we're going to answer the question, how important is pricing? Well, the short answer is very, but there are some really important stats that will talk about how important pricing is. We'll get to that in just a couple of moments, but first, let's take a look at the latest stats. Right now, we have 4,330 homes for sale throughout the county. That's up 84 from last week. Median list price $999.9, higher than it was the week before, with an average days on market of 40, one fewer day than last week. Pending sales 2405, that's up 6 from last week, with a median list price of $895, and that's lower than it was last week. Average days on market 24, no change. Months of inventory actually went down a little bit, 1.99, so we're back under 2 months of inventory. Keeps bouncing around that 2-month mark. Here's a chart showing total actives and total pendings. You can see the total actives going up, leveling off a little bit. Pendings kind of hovering around the same as what it's been. How many homes came on the market last week? 889, 52 fewer than last week. That was kind of surprising. Didn't expect that. Maybe because people were dealing with graduations and so forth. Median list price $949, $950, lower than the ones that came on the market the week prior. New pendings 423, 30 more than last week. So that's interesting. We saw fewer actives come on, fewer homes come on the market, more homes go under contract. Median list price of $940,000, higher than the week before. Average days on market 22, 3 more than last week. New pendings listed within the last week, 31. New pendings listed within the last 2 weeks, 192. So 7% of homes sold in a week or less. Keep that in mind as we talk about how important pricing is later on. It was 4% for the ones that went pending the week prior. So more homes went pending within a week than did the week prior. Same for within the last 2 weeks. It was 41%. Now it's 45%. How many homes closed escrow last week? 421. 37 more than closed the week prior. Median list price $974.9, higher than the week ago. Median sales price no change, $965. So we did see an increase in the median list price, which is higher than the median sales price, kind of a switch from the trend we've had. Average days on market 18, 2 fewer days than last week. The least expensive sale was in San Diego, $145,000, manufactured home. Del Mar had the most expensive sale for $9.5 million. Here's a chart showing new actives, new pendings, and new closed sales. And you can see we had been having a run-up of new homes coming on the market week after week, and we dipped this week. Meanwhile, pendings were up a little bit, sales were up quite a bit. Here is the chart showing the median list price and the median sales price. And again, as we're saying, median sales price lower than the median list price. Stephen Thomas had his reports on housing last week. Here is the chart showing total demand over the last few years. You can see demand lower, kind of hovering downward. Maybe we hit our peak as far as demand is concerned. It usually does peak around April, May, so maybe that's true. Maybe it'll keep going down. Not the same downward trajectory as a couple of years ago when rates were going up. So that's a good sign, but still way lower demand than we've had in many years past. Still higher demand than last year, though, which is good to see. As far as actives are concerned, you can see the trajectory of new actives going up. It's actually flatter than it was a couple of years ago, total actives rather. And we do have more inventory than we did last year, and more inventory than we had a few years ago. And we do have more inventory than we had in 2022, but that may be peaking. We'll have to wait and see. All right. Stephen dove into the importance of pricing. And this chart, I've shown this chart before, and he revisited it. But for the sales, the closed sales in the month of May, so just a few weeks ago, he compared the homes that had no price reduction before they sold versus ones that had a price reduction of 1 to 4% and 5% or more. 83% of homes had no price reduction, and their sales price to the last price ratio was 100.7%. So if it was the sales price was a million, maybe a million, but above that, and the last list price was $1 million, So it was 100.7%. Sales to original list price, 100.7%. What that means is the sales price versus what the home was originally priced for. Now, in the case of no reduction, it's the same as the last price ratio because there's no price reduction. Then you have days on market. But let's take a look at the ones that had a price reduction of 1 to 4%. 9% of homes sold with a price reduction of 1 to 4%. The sales price to last price ratio, 98%. So they sold for 98% of what they were listed for, but they sold for just over 95% of what they were originally listed for because they had a price reduction. So if they were at $1 million and they reduced it to $950, that's the ratio to the first one, sales to last price ratio, uses it compared to that $950, but 95%, that one compares it to the original $1 million. So you can see in 38 days on market. So the original list price was a drop of almost 5% of what it sold for. If you reduced your price by 5% or more, that's 8% of the homes. Sales to last price ratio, 96.7%. So you think not bad, right? It sold for 3.3% less than what it was listed for. But compared to what it was originally listed for when it came on the market before it had that 5% reduction or more, 87.2%. So sellers took almost 13% below their original list price to get their property sold. And it took 47 days on average. What does that tell you? If you price it too high and you have to reduce it by 5% or more, you're going to wind up on average taking 13% less than what you listed the home for. Here, this chart shows time on market and what that does to pricing. If you're on the market for 0 to 10 days, if you're in that category, that first category where about 7% sold in a week or less, percent of sales, 52%. So over half the homes are selling in 10 days or less. Their sales to last price ratio, over 100%. They're selling for above list price in short amount of time. But if you're on the market for 11 to 30 days, that's 27%. You're selling it for 98.7% of the last price ratio. If you're on the market for 31 to 60 days, 13% of the sales, 97.1%. So you're taking 3% off your list price if you're on the market for a couple months. If you're on the market for more than 2 months, only 8%, but they sold for 95.4% of their last price ratio. How about their original list price ratio? Probably much lower than that. So the bottom line, folks, if you are looking to sell your home, price it right the first time. You get the biggest bang for your buck. You get more people out there with the marketing, especially for our clients with all the marketing we do. Our goal was to get their home sold within the first week. The longer it stays on, if you have to reduce, you might still sell close to that final list price, but compared to what you originally listed for, it's a big delta. Might as well price it lower to begin with and get higher than your list price in a shorter amount of time. That's it for this week's Monday Market Moment. If you have any questions about that information and how that might work for you and your goals, feel free to give me a call, send me an email, send me a text, whatever. Don't forget to scan the QR code to track your home's value. I look forward to seeing you next Monday in the next Monday Market Moment. Have a great week.
Thanks for watching Monday Market Moment with Bryan Devore. To request a transcript of this week's report, send an email to brian@devorerealtygroup.com.